Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 28th of January. So I've seen some really good moves this week on a lot of the key indices and also a lot of the majors. So the dollar index is really starting to play the game now. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD. As you can see, we've seen a big sell-off. The candle that we were talking about last week, the shooting star off that level, certainly played the game. It ended up being an evening star pattern really in the end. And it's done nothing but short ever since. It gave us a couple of opportunities to get in with the 20 off the moving average, and now it's fast approaching that key zone that we talked about, which is the 70-cent mark. So as you can see, it's already at 70.25-ish at the moment. 70 is going to, more than likely pull it up. It's a pretty strong support zone at 70 cents. You've got to go out a long way to really appreciate that level. So you can see here, if we go out on a weekly, I'll draw a horizontal line there, and you can see that pretty much just below where we are now, you can see very strong support right through here, resistance right through here, and support right along there. So many years of support. So we would be expecting that it's going to find some sort of big support here when it eventually gets there. Hard to see it reversing before it actually does. Hopefully you're able to get hold of the short. There were plenty of opportunities. If you go to the smaller time frames, you can see that we've got a series of lower highs and lower lows. The lightning bolts everywhere on the 4 hour. So all of these were opportunities to actually get in. And even going down further, going down to an hour chart, you can see that we had many opportunities to get in. It can be as simple as just entering off the 20 moving average. Once you know that there is a directional bias and you know you're in a strong trend, it really is just a matter of getting into that trend and using the moving averages to do so. So really good trading. Hopefully you're able to get hold of some of it. Like I say, though, we are approaching support now. So at this level here, we'd be looking for some sort of a reversal. Maybe it might consolidate here for a little bit, but any form of a double bottom or a lightning bolt on the way up on a smaller time frame could get you in for a potential scalp back up to the 20 moving average. But I wouldn't be expecting that it's going to go to 73 cents anytime soon, or not in a big hurry anyway. You'd expect a lot of price action and market action down here first. So we'll keep an eye on this one. Hopefully you're able to get hold of it. And if you didn't, look for a bit of a change of trend, but make sure you get the lightning bolt on a serious time frame, like maybe a 4 hour, probably at the minimum, because this has been a very big sustained move, and you need a decent time frame to actually break that trend. So look for a 4 hour lightning bolt on the way up, and then maybe start trading towards the 20 moving average on the daily to level it out. But yes, very important support coming up on this one. So I'll move on now to the US dollar CAD. So this has been a bit of the start of the show as well, really. Like we saw all of this price action hovering around the 200 moving average, and that obviously a very key zone at 125. You can see the green line there that we drew last week. We expected that it was probably going to find very strong support here, and it did. And then it got moving, obviously aided by the strength of the dollar index, but we'll get to that in a second. As you can see, once it did eventually break past all of this noise, it was a trade, and now it has broken past all the key moving averages on a daily. So realistically, it's fast approaching a fair bit of resistance. You can see here that we've got resistance right through this zone. 2 rejections there, rejection there. This may pull it up here, but in saying that, it's got 128.50 to 129 firmly in its sights. This is probably the level where it really wants to get to. So that's the stronger resistance level. If we put a line right through there, you can see why this was so strong. Big rejections off that, and even when it did break through, it wasn't up there very long. And you can see here, even when it did come down, it tried to retest higher. So this is a very strong zone here, just above the 128. Still a fair few pips to go, but it has been a long sustained move now. So I wouldn't mind trading into this area. If we do get a pullback to a moving average of any significance on a smaller time frame, you could find yourself in a good trade. That's the area that I'd be looking at. If you go to a 4 hour, maybe a pullback, even on the 1 hour. I mean, you can go to the pullback to the 20 there, or even on a 1 hour, if it pulls back and comes and touches the 20 moving average again and continues with the lightning bolts, that is your very clear target. Okay, so you got very strong resistance there, so we'd be aiming for that particular move. Now, as you can see, we've got there is a bit of a channel forming now that we've found ourselves in, a bit of a zone. A lot of price action has been inside there. We're well and truly on the way up to the top end of that channel, though, so be very mindful that the momentum's all the way up. MACD power is everywhere. As you can see, this is the daily chart about to break above the 0, and the histogram is signal line is definitely out of it. So there's still a fair bit of power and a fair bit to play out here, so it wouldn't surprise me at all to see this continue on and power on. But if you're not in it already, you can just look for a pullback to the key moving averages and then maybe trade into that direction. It's got a lot of work to do to actually reverse this trend and convince me it's going to go short. And that's going to take a lightning bolt on the way down, of course, a series of lower highs and lower lows on a smaller time frame. If it does that, then we'll start looking at the smaller time frames again. But it's got the upside is definitely the preferred one here because there's a lot more momentum on your side, and it's definitely the easier trade. All right, let's move on to the US dollar yen. The US dollar yen has been another really big improver this week. Look, it started out a little bit lackluster. It was underneath the roll reversal zone that we saw here around that 114. It was very lackluster when everything else was moving, but it certainly has broken through now. The last two sessions have been very, very strong for it. You can see here that that daily candle moved right through and broke through the 20 moving average, which is a very, very strong sign. That was your sign to get in, really. I talked about this at the webinar during the week. Once you get past the moving average and you get a close above it, that is your signal to go, and go it did. So look, it finds itself at a bit of resistance now, but realistically, it's still got a fair bit more upside. I could definitely find it. The MACD power isn't the same as it is on the CAD, as you can see. It's a little bit more flat liney, but that's really a consequence of it being range bound. Really, it hasn't had a big range of movement like the CAD has. So those MACD moving averages have found themselves pretty close together. So that's why it's hovering around the zero of very little histogram. So look, realistically, still plenty of power on the way up. You can see it's broken the key moving averages. It is at resistance right now, so this is not where you would be entering. Of course, the 1520 is a bit tough, but a pullback down to 115 and a bit of a roll reversal on a smaller time frame would have me long on this, and then I would be looking for that 116 area, which is the previous high here. So that's where we're pretty much targeting on this one. That's where the momentum should get it to. Failing that, a change of trend and a breakdown below this level. As you can see, it's got a fair bit of work to do to actually do that, but nothing's changed from last week. In order for us to short this one or even attempt to short it, it needs to break through and get a daily close well below all of these bottoms here. So it needs to get down to around that 113.20. If we get a close below there on a daily, then we'll start to look at the shorts down to that 111.50 to 112. But at the moment, the momentum's all the way up, and we're looking and barracking really for the move up, because that way we're going to get momentum on our side, and it is definitely the easier trade, but certainly good trading on the US dollar yen. All right, dollar index, the star of the show and what's making everything really move. You can see here, we talked about this. It was showing strength last week. We were very, very happy with the way it was looking. When we went to a weekly, it was still very, very clearly in a series of high highs and higher lows. We knew this. It came off, a very, very strong base. So this has been a very strong week, but no one's going to be surprised, right? We've got a 200 moving average here. We've got a 20 moving average, both of them supporting it. So there was no reason for it not to long from here, and long it did. Now, it's a very, very important close here. We want to see this close above these levels here, and that's really going to set the tone for next week. So that's going to really add strength to the US dollar CAD and the US dollar yen, and obviously on the flip side, really put pressure on the Euro USD. So what we want to see is this continuation. We want to see this candle close above this level here, and we want to see, this is a weekly candle, don't forget. So we want to see this week close out all the way up here. The daily, this is important too. We want to see a daily close at this level here as well. But of course, we've got a whole other session that we have to contend with. So we want to make sure that the weekly is the one we really watch here, because that will be the driver for next week. If we get that weekly close above those levels and maintain this level here, it's going to bode very, very well for some really good trending opportunities next week. So the direct consequence of that, of course, is the Euro USD short. As you can see, it's broken through all of these key levels. Look, it's even gone past the 112, which was historically an extraordinarily strong level, really. Like, I'll go and show you. I mean, it's not that surprising because the dollar index has obviously done the same thing, and it broke through a very key level. But this 112, I'll draw the line right up here. You can see it's very, very strong zone. It was strong support there, resistance right through there. But when you go like far out, let's see if it will bring up the data for us. You can see how important this was, even way back in 2014 and 15. You can see how important this zone was. Look at all that resistance. This is a monthly chart, right? Like, you're talking about nearly a year's worth of resistance at this zone. So it's very, very important to say the least. So when we go back to a daily, you can see how significant that break is. Now, this candle, nothing short of a miracle is going to stop it from actually closing below this level today. But, it's one of those ones where this is going to be governed absolutely by the dollar strength. If the dollar index continues to strengthen, this is going to continue to short. It's no real surprise to see it, continue down, but I thought it might find a little bit more support. It might respect the 112. So I am almost expecting a bit of a rebound back to the 112 now. And that might be a scalping opportunity. So I mean, if you go to a smaller time frame and see what it's doing, you can see that we're effectively at 114.40, so about 60 pips down from where we would have expected support. So maybe a little bit of a change of trend, maybe a 15-minute lightning bolt. You can counter trend this one. You can see the 15 minutes starting to level out a little bit. If we start to see a series of higher highs and higher lows on the 15-minute chart, perhaps we could get a scalp back up to the 112 area, which wouldn't be a bad scalp. If it gets above these moving averages, MACD starting to shift a little bit. You can see it as that starts to flatten out. So that's probably the trade on the euro at the moment. If you're not already in the short, we should have been able to get into that short from last week's analysis, really. So hopefully you're able to catch that. But now it's a difficult area to go short because obviously it's broken a very key level of resistance, and we'll be looking at retesting it from the bottom now. So if we see a bit of a change of trend here and starts to push up with a series of higher highs and higher lows, that might give us an opportunity to actually get back to the 112 and then look for a shorting opportunity to continue it down from there. So two ways to look at the euro. Both of them are pretty good. So you keep an eye out for the small changes of trend and remember the very key zone at around that 112. So we'll move on to the indices now. Look, let's just go to the US 500. As you can see, we've got very, very big mixed candles here. The last week has been just absolutely chaotic, as you can see. Very big rejections, big negative days, big pull-ups. But for the most part, nearly every day except this one has finished down, okay? So, the Fed's already come out and, defended what it was going to do with interest rates. So nothing's really changing there. At the end of the day, we were always going to see the increases at some point. Now the market just has to deal with that. It's taking its time to consider it. Look, every day's price action has been very, very mixed, as you can see. Like today is effectively an indecision doji. If it closes at this point here, it's effectively closing right in the middle of the big range that it's shown, and it is a fairly big range given the recent price action. I would expect it would probably find some sort of support around this level here, and I think that's why the volatility is definitely in play this week, and it's finding itself closing at around the same zone. So as you can see, although the candles have been chaotic, they've been closing and opening at a very similar area around this sort of 4,300 to 4,350 area. So it's finding its median at around this point here, which is no surprise because it's obviously a reasonably strong level. Where it goes from here is going to be an interesting one. Look, it's one of those ones where you have to wait and see. And as you know, with trading, there is always a bit of a wait and see element. For me, this is going to be very difficult to trade until it does one of two things. It either gets a daily close above the 200 and above this level here, which is above the 4450, or a close below the 4200. Any of those signals is going to basically determine where the trend is going to go. And that could happen very, very quickly. That could easily happen in tonight's session. So realistically, it's a difficult one to trade. Even trading between those zones, normally, if the market was less volatile, you could say, well, maybe we could trade inside those zones. But because it is so volatile, it's very, very whipsawy, and short-term trades with small stop losses can get taken out very, very quickly and very easily. So you really want to be mindful of that. So for mine, the better trade and the more sensible trade is to actually wait for a close above or below this volatility. If we get that on the daily, that's going to be the key. Now, if we go to a weekly chart, this is obviously a very important candle as well, and that's going to determine where the week closes is going to determine next week's action. If it closes right here, we're going to probably find a little bit of consolidation and maybe a bit of sideways movement next week. But of course, if it pushes down and we've got a big red candle by Saturday morning or Monday morning our time, that's going to bode very, very badly for the indices and probably all the key indices around the world, actually. And we're probably going to see quite a weak start to the week and probably continuation of some very serious trends. So the price action is key here. So whatever the weekly does is going to determine if we get a big pull up and all of a sudden this is a big hammer candle, okay, like bigger than it is now, and we get a close up around this level here, we're probably going to see some pretty strong action next week, and we're going to see a lot of these big sell-offs probably reverse a bit and give quite a bit back. So really, this is the key candle to watch. The dailies are important, but when we see big moves like this, we need to go to the bigger time frames to really understand the price action, and hopefully with a little bit of luck, it'll give us a really good determination of where the trend's going to go, so we get some very clear trading next week. So Ideally, we either see a close all the way down here or a close very close to the top, and that will determine the big trends for next week. And I think it will give us some really, really good trading opportunities. So it's been a great week. I hope you got a lot of the good trades that we were talking about last week, because I think a lot of them played out this week. We've seen good volatility, which should lead into next week, so we should be able to get hold of some pretty good trends, either on the recovery or the continuation of the sell-offs and up movements. Have a great weekend, everyone. I look forward to seeing you all next week.